Greetings, beloveds. With about, let's say, 10 minutes to go before the end of the session, we are looking at markets here trading slightly off the lows of the session a couple minutes ago as far as the US markets are concerned. And this is market summary going into the weekend of July 8th and 9th, 2023. That's the general market. And we can see as far as the cryptos are concerned, we can see BTC and Ethereum trading slightly higher for the day, but I'll show you down for the week. So we can see the weekly summary. Markets are down across the board in terms of US indices, and also as far as the cryptos are concerned, anywhere, let's call it for about 1 to 2 to 3%. Ethereum down the most, down about 3.8% as of right now. Let's begin by taking a look at the NASDAQ. From a 2-hourly standpoint, we can see here we saw an improvement in prices when the market made a slightly, and with this slight improvement on the 2-hourly, take a look at your technicals. Your RSI made a lower low, and more importantly, the RSI stalled at about 61.8, which, as I always say, is a very strong negative divergence. And we can see here, we take a look at this breakpoint also, and the breakpoint, just to be clear, is coming from this break here. We get a pullback after that, and after that pullback, market did come back to test that same level of the RSI, and we see it turned into rejection. So this might explain why hour to hour over the last 2 days or so, market's been pulling back, especially here in the last hour of the session. Now, this is the 2-hourly, so we shouldn't put too much weight in it. But also, if you take a look at this from a longer standpoint, going all the way back about 11 months of 2-hourly data, so 11 months of 2-hourly data, we can see that this is the line right here that needs to be broken if the market is to see a serious drop. In other words, before we see a major plunge, this line needs to be broken. We can see that we are not close to breaking that line. So I would say even with a pullback here this week, the market should be looking okay. The momentum is not necessarily broken as of this point. As we are closing here, market's pulling back, and we can see the market is seemingly right now putting in what looks like a double top here. And this double top is around RSI 69.1. So that's something to concern those who are bullish, that this formation could lead to a pullback. In a sense, would be similar to this pullback we get here in late 2021. And we know that this is where we saw an all-time weekly closing high for the NASDAQ. So if the market continues drifting below this level as far as the RSI is concerned, then we can anticipate a market here with a slight taste for lower prices, unless the market can engineer a way to recapture RSI 69.1. Now, of course, if we can take back RSI 69.1, then that could change the settings here and the market could see higher prices. Right now, net, the way the market is closing with this double top rejection of the RSI at 69.1, one can anticipate that the market is starting to open the door for some type of a pullback. Now, keep in mind, even a pullback here is not going to be serious in terms of how much down the market can go until we break this simple RSI lows line. The last time we tagged it was here in early March during this pullback week, and a straight reversal after that, the market would go on to record fresh 52-week high. So this is the line I would be watching, because at some point when we break it, that would introduce stronger selling. Now keep in mind, these lines need to be broken, just like we see here in late 2021. There is this rejection here, which is the highs right there. Hope you can see that. Now, if you take a look at a longer view for the NASDAQ, so we had that double top. Now it looks so obvious right there, but it's not until we break this trend line here that the market goes into a more, we can call it, serious drop. So it took a while because the market did stay in this range for a couple weeks. So same thing here. If we're going to see a big drop again, the market would have to break this RSI lows line, and that's something it's not even about to do. So we can anticipate that even as it comes back to test that line in good time, testing this line keeps the market in this general area. And if it's going to go down, it's going to have to break the line first and foremost. The NASDAQ on the daily, I'm going to propose the following line, which might in a sense be considered a line that could offer support. It is this simple line here, and I'm using this because it did begin this nice uptick in the market right there, and market did respond well. So I'm going to draw a line from there, a search. And what I'm saying here is, as long as we are bouncing on this line day to day, then this is still a market that could see another attempt to make fresh 52-week highs. Now, of course, in the short term, if we end up breaking this line to the downside, then that's a market again with an appetite and the possibility for day to day pullback. Another way of looking at this is really simplify things and just take the recent daily RSI lows and draw them as such. And you can see we're not close to breaking those lows. So let me remove all those lines. And again, this needs to break before we can go down significantly. We haven't broken. And let me bring back the previous line. As long as we're above the blue and the red and the black line, the blue and the black, then this means to me that more than likely there's a good chance of support around here and another attempt to continue moving higher. Understanding that a break of these two lines would mean that the market is to see a continuation of this recent pullback this week. Market did just close, and I'll show you the closing numbers at the end. And we can see here, this is the Dow from, let's call it weekly chart, and go back to this close here on the Dow from late 2022. And we can see a series of failed breakout attempts. I mean, this has been going on for pretty much since late 2022. We came close here. So all of these are failed weekly breakout attempts by the Dow. And remember, the more you fail and fail and fail and fail, ultimately that can open the possibility of lower prices. In other words, if the Dow is going to go higher, bulls need to see price showing evidence of strength by moving above this range. And to be precise, this closes at 34,429.88. So this is a weekly closing high from late 22, sorry. I've also been proposing the following RSI line. If you draw it this way, you got this topside resistance line that has been a problem for the Dow and bulls. And then we have this bottom side support, which has been offering support during pullback. So ultimately, at some point, the market's going to have to make a decision. Either we clear this line, clear the 2022 weekly closing high, break out and go higher, or we break below this area here and we see this market pulling back significantly. So we are still within this construction of this long-term wedge on the RSI. The market's going to have to tell us what it wants to do. And so that's going to take some market observation for it to be at least evident which way the market is leaning, either a breakout or a breakdown of the wedge. S&P 500, we can see here. So a couple of ways of looking at this is this bottom side line that needs to break if we're going to go lower. If we bounce on this line, then that means that the market still has another attempt to make another fresh 52-week closing high. And we can also see that it corresponds with the NASDAQ because we can extend this line as such. And we recently did clear this line here, which begins this move. We tested the line here late June, which is this lows here on a day-to-day basis. Again, if we can find support on this line, on the two lines, then more than likely we're going to see another push and we're going to attempt to make fresh 52-week highs, if not improve on them. If the market's going to go lower in the short term, day to day, week to week, we would have to break below these two lines. Since we haven't broken below the lines, we anticipate here a market that is still with some remnant of strength to the upside. Now, the NASDAQ monthly, and I've discussed this over the last couple of weeks, this area here is a serious area for those who are bullish, because if the market cannot clear this break point from early 2022, this break point here seems to be giving a little bit of a problem here. If the more the market drifts away from this area, in other words, the more it confirms resistance, we are looking at a market here that is setting the stage for a meaningful, sizable pullback from current levels. So the only way to correct this is the market would have to clear this line and move to the upside. Now, this is an important line because go back even further in terms of going back to the lows of 09. I've been talking about the fact that this is being or is giving the market a backtest line, and if the backtest line cannot hold and if it turns into confirmed resistance again, this is where you'd be very cautious if you're bullish, because this resistance here and then of course with the other line, those two lines, if they continue giving the market some problems, I would say this is a sign that this market does see a reversal and a strong reversal lower. So that's a line I would be watching. Again, if you're going to go higher, you want to see the market clear these two lines. And I would say a reversal around here, in my opinion, just based on my understanding of a reversal here, is going to lead to probably taking back half of these gains from the lows initially, maybe even more, but we shall see. Resistance around here is not good for those who are bullish. It's great if you're bearish. Taking a look at the ETF that tracks the European markets, the EFA, at some point this week was down huge. It's come off the lows from the weekly lows, and we can see this is on the back of a failed weekly breakout. So things here are starting to look like they want to turn down. This is a failed weekly breakout here. And now if it drops below the recent May weekly closing low, in other words, if we end up drifting back below this range on a week-to-week basis, anything below here, this is a market that is primed to go lower. That's the weekly. But if you take a look at the daily is showing that after a pullback this week, the daily is fine. And the reason why I'm saying the daily is fine, it's a simple line connecting RSI lows. If you draw it as such, it could suggest that the big selling from this past week for the European markets have come to a level where you'd anticipate support to come in, and maybe even from here, the probability of sideways to higher European markets net. Now, of course, because the two lines are defined, we know that if we end up breaking below the two lines, that's gonna introduce further downside action. But I would say because we ended the week and the session here with this support line, because the support line is holding, I would give it the benefit of the doubt for a sideways to higher market from here day to day. The Japanese market was down about let's call it about 2%, a big down week there. And we can also say that there was a breakout attempt that also failed. So all of these things are adding up, and they're showing markets that are looking like they want to pull back. But remember, we've had a big run. This is a big run, so even a pullback is not the worst thing. It's a big run right here. Even if you spend some time here building some energy for a future breakout, pullbacks are okay. But if you take a look at the long-term monthly view here for the Japanese market, we can see the Nikkei here. If you take the simple RSI top side line, you can see that there is some concern here for bulls because it's tagging this line exactly where you'd expect to find resistance. So we can say that as the more it continues having this look and the more we start drifting lower from current levels, this is suggesting that even the Japanese market could be setting the stage for a pullback. Of course, the only way to cure this and to correct this look is to ultimately take up the level above, break out above this topside line, which goes back all the way to 2005 highs. The Nifty closed at a fresh 52-week weekly closing high, and we can see the RSI did end the week above 69.1. So it's a sign of strength and could also be a trap area in a sense, because the last time we had a reversal, let's say going back to 2021, here we were rejected at RSI 69.1 for those reversal areas. So what you'd want to do here, or want to observe if you are bullish, you'd want the RSI to continue holding above 69.1, so this can continue recording improved week to week all-time weekly closing highs. In other words, resistance around here back below 69.1 could set the stage for some type of a short-term pullback. But net, if you take a look at this from a longer term perspective, as long as your RSI is above the prior breakout line, so I've been talking about this level here, and I've been talking for many months that this, if it held, would be a reversal area. If it held here, would be a reversal area here. And coming into 2023, if that held back above it, would be a sign back to new highs. We are back to new highs. So I would say what the bulls want to see here is you'd want to see the Nifty retake RSI 69.1. Above 69.1, we get very strong market momentum. So that's what the bulls would want to see. You'd want to see your RSI reclaim and move back above 69.1 for an improvement in momentum. Now, the last thing you want to do here is in terms of a pullback situation is we've seen this improvement month to month, but if the month turns negative and this makes a lower low, ends up looking like that. In other words, confirmed negative divergence. Confirmed negative divergence could set the stage for a meaningful pullback. So that's the last thing the bulls want to see. Right now, I would say momentum favors the upside as long as the weekly RSI is above 69.1. Taking a look at GLD or gold on the daily, and I'll compare that to the dollar. So we have this, by the way, let me just begin by saying we are trading between the 50 and the 200-day moving average. We have the 50 coiling down and a flattening out 200-day moving average. So not a lot of direction here. This is confirmed by the RSI in my opinion. We got this bottom side line which has been holding it, which also happens to be where we've been getting support around the 200-day moving average. You got this top side line. I would say this is a wedging pattern situation, and the market is going to tell us which way it wants to go. That's the GLD or the gold daily chart. And then here we can see on the dollar, again, it's trading around its 50-day moving average. But the difference here, in my opinion, is we have an upward sloping 50-day moving average and we have a slightly upward sloping 200-day moving average. So net, I'm still giving the benefit of the doubt to the dollar just based on those moving averages pointing higher. But even here we see a wedge pattern, and ultimately either we're going to break out in the short term or we're going to break down, which should give us direction as to where gold is leaning in the short term. But we can say net, we've been stuck in this range since about late May. So not a lot of direction for gold and GLD. Now, as far as crude oil is concerned, or XLE, which tracks the energy space, as long as the monthly for USO is moving above 50, let's give this the benefit of the doubt to record a big monthly move to the upside. The last time it had a monthly move above RSI 50 was here in the beginning of 2022, and we saw a big move during that month. So as long as the RSI is moving above 50, we give an instrument the benefit of the doubt to hold on to most gains for that period, which is the monthly in this case, and closing towards the highs of that session, in this case the monthly time frame. Now, of course, if we end up giving back the gains and we see ourselves back below RSI 50, then that means that this is just a muted move, and ultimately there's no strong move if you cannot hold above RSI 50. But for now, I'm giving crude oil the benefit of the doubt and energy as a group, as a sector, to be strong for the month, as long as the monthly for USO is moving above RSI 50. Taking a look at Bitcoin, we can see that it's been just hovering this breakout area, very tight base. So obviously, if you're bullish, this is constructive. You'd want to see it now break out convincingly and clear that 30,000-ish, 322-ish area, which is the weekly closing high from April. If it can clear that level convincingly, we might have another move to the upside. In other words, if we want to go back to chart setups or price setup, we could be forming, we can say, a handle situation here with a possibility of breaking out. But at the same time, this is the 2-year weekly. If you peel out and add some more time frame data, you can see that this is clearly an instrument that needs to clear this topside line on the weekly. In other words, as long as we are being rejected here, we could be looking at BTC struggling to clear this area. Of course, we need some energy. If we can find some energy and move above this line, we would move above this price level here with this range, and we would see another spike to the upside in the short term. So I would say it's a market that is looking for some direction. Now keep in mind, even if we pull back here, it's not like gonna be the worst, because we still have this line here. And the only way I can explain this quickly is we break out here and we use this as support here for these lows. So as long as we're above the blue line, even with a pullback, I would say BTC is fine. Another way of saying this is we don't see a major sell-off until we see this RSI lows line break. Just like we needed to see a break, and it's only after we see this break here in 2022 that we see this big slide. Remember, it had been sideways here, messy for a while. But it's only until we break below that level that we see a big pullback. And so you can anticipate that this blue line, so this line here, this blue line, is the one that needs to break down the road if we're going to see lower prices. Since we are so far away from that line, I'm giving the benefit of the doubt to the sideways to higher crypto market. This is now the daily, and the daily here also day to day, we can see I can draw a line as such. What this line gives us is this recent breakout on the daily, which led to this nice price advance. So we take that information and draw our uniformity line as follows. And you can see day to day, as long as we are holding above this line and as long as the market's trading above this line, there's a good likelihood of testing these highs, if not improving on the highs. So I would say day to day, until we break this area here, day to day, even BTC is looking to be sideways to higher. Of course, as I've been talking about to subscribers, the big situation here is if this backtest line becomes resistance. So that's something to consider going forward. If this is rejected here, not good, especially if the monthly RSI drops below 50. That's BTC. We see something similar with Ethereum, just as a risk and something to consider. Is the last thing you want to see here is this backtest line becoming confirmed resistance. Ethereum dropping below 50 on the monthly would mean a big monthly move to the downside. So right now they are holding exactly as they should, with a little bit of a bias to the upside, but understand that there's also, just as the NASDAQ monthly was looking and is showing signs, it could turn into a big resistance area on the monthly, and if the monthly charts start turning down, be on the lookout for significant pullbacks for the NASDAQ, general market, and cryptos. But remember, net, the dailies are still fine for the general market and the cryptos. These are the closing numbers for the week ending July 7th, 2023. I am Eric with Mother.com. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.